we offer every month on issues important to title professionals. I'm Jeremy Yowie, Alta's Vice President of Communications, and today we're going to discuss home buyer and seller trends with the goal of helping you understand what's going on in the marketplace over the next year so you can hopefully get a better understanding of the types of title orders that may be coming in your door during 2015. Before starting, I just need to touch on a few housekeeping items. A copy of today's presentation was emailed earlier today to all registrants. If you didn't get it, shoot me an email at jyohe@alta.org, and that's jyohe@alta.org, and I'll send you a copy once the webinar concludes today. All participant lines are muted for the presentation. If at any time you have a question, use the chat box function and we'll address questions at the end of the webinar. I need to thank Fidelity for sponsoring our Title Topics webinars this year. Their support allows us to provide these educational opportunities free of charge. And as an added benefit, today's presentation is being recorded. Once we have it processed, it should be available next week on Alta's website at alta.org/title topics. And again, that's alta.org/title topics. And there's an archive of all the webinars we've done over the past few years as well. With that out of the way, let me introduce today's speaker. Joining us is Jessica Lautz. She is the Director of Survey Research and Communications for the National Association of Realtors. Jessica analyzes NAR's data and writes annual studies such as NAR's member profile, the profile of home buyers and sellers, and the commercial member profile. Jessica, thank you for joining us today and sharing some of this great information that NAR collects. And with that out of the way, I will go ahead and turn the presentation over to you. Let me give you control here. If I could get my computer to do that. So here, just a second, bear with me here for a second. There we go.
Okay, hopefully everyone can see my screen now. Thank you so much for having me here today. Today I'm going to be going over some of our recent results that we've had from the profile of home buyers and sellers. And this report is a report we've been doing since 1981, which gives us some wonderful trendline data so that we can look and see who our recent home buyers are, if they're changing over time, if first-time home buyers are decreasing in the market, which we know they are, and trends like these. So it's very helpful that we look at demographics of buyers and potential buyers out there to see how the market is changing. The methodology of the report is that we actually collect the most recent data that we possibly can. So we're looking at July to June, and we release this report in November. We survey, it varies year to year based on oversamples and recent buyers in the market, but we surveyed just under 75,000 questionnaires that were mailed out to recent home buyers, and we had a response rate of 9.4%, which is pretty strong for a mail-based survey. One of the caveats that I will say about this report is that because we actually mail out the survey, we're looking at primary residence buyers only. And the reason why I say that is if you're a vacation home buyer, recent buyer in the market, and you bought a cabin or a beach home, you wouldn't necessarily be there year-round, so you wouldn't receive that survey in the mail. The same is true of investors. When we look at investors in the market, they are not checking the mail necessarily of that rental property that they may own, so they wouldn't be filling out the survey either. The few that we do get back who fall into those two categories of vacation home buyers and investors, we actually remove them from the sample, so it's purely primary residence buyers. We do know from another report that we do, the Investment and Vacation Home Buyers Survey, that there is a significant share of the market, 2/3 of the market, are vacation and investor buyers. So if you are interested in that and you work with those types of consumers, we do have that report available as well. When we look at the demographic changes that we've seen in the market, they're pretty striking. we see that the age has increased and the income of recent buyers has increased. Another thing that we're seeing is that the share of married couples have increased in the market as well. So we actually see this drop in singles where we used to have a higher share of single females in the market. Another aspect that we're seeing is because of this higher income bracket who's purchasing homes today, we're actually see that from 2010 to 2014 that the share of buyers who own a second home, who have the ability to purchase a second home, has actually increased. When we look at the household composition on a chart, I think it's very interesting that we see from 2010 on this spike in married couples. Partly this is due to the drop in first-time home buyers in the market. First-time home buyers typically are singles as opposed to married couples. This is also due to tightened credit conditions where lenders may look at married couples more favorably because they have dual income. We see a rise in household income, and we can see this very strikingly over the past 10 years, how the income of buyers has increased, not just among repeat buyers, but also among first-time home buyers as well. One of the charts that I think really displays what's happening in the market today is this drop of first-time home buyers. When I actually received the data set and I was working on it, I emailed my vendor and made sure that the data was actually correct and there wasn't a bloop and somehow data entry or transferring the files, and there wasn't. We've actually seen a drop to 33% of first-time home buyers. It's the lowest share that we've seen in the market since 1987. 1987 was Black Friday, so this is not necessarily a great signal. One of the things that we do know, though, that even though we're seeing this drop in first-time home buyers, is that there is a desire for Gen Y to buy a home. And this isn't based necessarily on just our data that we have at NAR, but we do have data indicating that there is a desire for home ownership and that home ownership is a good financial investment for first-time home buyers. We actually see it from other sources, such as the Demand Institute, from Fannie Mae, and for other regular surveys that are done in the market. When we look at our recent buyers, we see that the primary reason why they want to buy a home today is just for the plain desire to own a home of their own. I think this is really important when we think about buyers because there's a lot of reasons to buy, whether it's a job relocation, a better area, a change in your family situation, perhaps a marriage or divorce, but it's just the plain desire to own a place of your own. Be able to paint the walls the color that you want and have that yard and have people over and say, I own this, this is mine. It's the quintessential American dream to have this place. When we look among our repeat buyers, they may have started out saying, I just want this desire to own a home of my own, but they actually change over time. So this reason to move on from their previous home is often an impetus from something else in their life going on. So job relocation, the desire for a better area, location changing perhaps, or a change in their family situation. We also know that our buyers say that their home is a good financial investment. And when we look at this by age, it's very interesting as well because we see that our younger buyers are actually more likely to say that their home is a good financial investment than our older buyers in the market. They have more optimism going in. One of the questions that we've recently asked is, what was the most difficult part of your home buying process? And if you had a difficult time saving for your down payment, what was the debt that held you back? Now, when we give buyers a list of things that could be difficult in the buying process, saving for a down payment is actually pretty far down the list. It's more common that actually finding the right property is the most difficult task. There's been a lot of talk in the media about student loan debt and about the difficulty of first-time buyers who are out there and the difficulty of Gen Y as a generation. And we've actually seen this effect happening, and we've seen it among our recent buyers. There's double the share of individuals live in a multi-generational home than they did in 1980. And it's very common for those who are in the age bracket of 25 to 34 to actually live with their parents right now, whether they're unemployed or employed, although among the unemployed this is much more common. When we look at our recent home buyers, we see that there is a share who actually purchased a home to be a multi-generational home. So when we look at our younger boomers, we actually see that 1 in 5 purchased a multi-generational home. This is very important when you're thinking about working with potential buyers out there and thinking about their intentions in their home. So whether it's taking care of an aging relative or because their children over the age of 18 are moving back into their house. Another trend that we're seeing in the marketplace today is that if you purchased a home between 6 and 15 years ago, you actually may have wanted to sell that home sooner than you had. And the reason why is because you owed more on your mortgage than your home was actually worth due to the dip in equity. And we see that this is most common among those who purchased a home 8 to 10 years ago. 26% of them actually did want to sell their home sooner, but decided to live in their home longer. A small share, 1 to 2%, do end up renting their home if they're in that situation. So they've literally just outgrown that home. That home is not the right place for them at all, or they've had a job relocation and decided to rent out that home. One of the things that I think may affect your market is looking at the tenure in home and looking at the actual tenure and how this has increased in recent years. We see that the typical time in home has been 6 years, and that's actually increased recently to 10 years. This is the longest history that I have going back in this data set, unfortunately. When we look at the expected tenure, we can also see that this is risen higher than it was in 2006 and 2007. And now, the expected tenure in home is always a little bit higher than the actual tenure in home, and there's a couple of reasons behind this. One is, once you go through the mortgage financing process, once you go through the moving process and actually pack up all of your belongings and move them to a new place, you don't necessarily want to pack them back up and do that again. There's also an expectation when you go into a home that perhaps this is your forever home and you're never planning on moving again. Now, we know that that's not necessarily true for some. We ask our recent buyers, what would cause you to move in the future? And there's a number of factors there. Household and family changes are the number one reason. So children moving out, a marriage, retirement, the life changes could cause you to move. And 24%, 1/4, actually say that this is my forever home. I'm not actually moving in the future. Now, I don't necessarily know that that is a realistic expectation either. When we look at the types of homes that are purchased, this is on a nationwide scale, so this is not reflective of local markets in San Francisco, New York City, or many other areas. But most of the homes that were purchased are previously owned homes. Most of them are in the suburbs, and most homes that were purchased were 3 bedrooms, 2 baths. The location, of course, matters, and the quality of the neighborhood matters the most to buyers. One of the things that's interesting here, of course, is that the quality of neighborhood has always consistently been the number one reason for the location. But this means something else to me than it does to every listener on here, because that quality of neighborhood could be defined differently. Commuting costs have become more important in recent years. We've actually seen that a large share of them consider them very important to their recent home buying. When we look at other green or environmental features, we see that heating and cooling costs is at the top of the list. And the reason for that, of course, is when you look at your pocketbook, that's something that you're going to be paying for on a monthly basis. That actually goes directly into your household costs. We actually see that energy-efficient appliances and lighting are directly below that, One of the things that I think is really interesting is that older buyers are more likely to think about environmentally friendly community features and landscaping in their home buying considerations. When we look at potential compromises that can happen, the biggest thing that I want to point out here is that buyers are unwilling to compromise on the quality of schools and distance to schools. I think that's very important to keep in mind, that buyers, this is just something that's not willing to compromise for them. Tightened inventory is especially tight in the winter, but this is happening over the last year as well. So what we're seeing is this affects both the buying and the selling side of the transaction. Buyers are seeing fewer homes in a tightened and compressed time period because they're feeling perhaps pressure to jump on that home that may be perfect for them. The hardest task in the home buying process is just finding that right home to purchase. On the selling side, we do see, however, that with that tightened inventory, prices are increasing. It also increases the equity in homeowners' homes, so they may have the ability to move faster than they had before. We're seeing that sellers are typically receiving a higher final asking price, and the median time on market has dropped. Another factor that we're seeing here with tightened inventory is actually amongst FSBOs, so for sale by owner sellers. We ask our sellers, did you actually know the purchaser of your home? So is this actually an arm's length transaction? You're selling to a child, or you're selling to perhaps a renter who's in your home right now, someone you actually know. We then ask, okay, if you didn't know the buyer of your home, those people who was a complete stranger, a true FSBO sale, how did and why did you decide to sell via FSBO? And 15% were actually contacted by a buyer that they did not know, asking if they could buy their home. So perhaps they were going through an open house in that neighborhood and said, that house has a nice yard, I'd like to buy it, and that house was not for sale. We also see tightened inventory affecting our members. So we ask our members in our member profile, what's the most important factor that's limiting you from having an additional client? And finding the right property for potential clients out there is the number one factor. Mortgage financing used to be the number one factor and was for a couple of years, but now it's been replaced by tightened inventory. One of the things that I think is really interesting is during all of this, the tightened inventory, drop in first-time home buyers, market changes that are pretty substantial, we're actually seeing the use of the agent remains very high in both the buying and the selling side. To give you a historical time frame for that, we actually see that in 1991, only 77% of recent sellers sold using an agent, and today it's at 88%. We see this drop in FSBO sales as well during that same time period from 19 to 9%. One of the things that I think is really an interesting dynamic is that while buyers may use the internet to search for homes, they're not comfortable actually searching for their agent online. Personal recommendations are generally what lead to the connections between the buyers and sellers and their agent. Most were referred by a neighbor, through a relative, or working with someone who they had previously worked with before. We also know from our members that a large share of their business is actually from past clients and consumers or from referrals. The vast majority of recent buyers only contacted their agent once before actually finding someone to work with. When we look at the search process of finding a home, it's actually changed pretty drastically in recent years. So back in 2001, we were asking people, did you use the internet to search for a home. Today we're asking about their use of a mobile device, how they're using a mobile device. Are they using apps or just a search engine? So it's really changing the home search process. We have seen that using just a website versus a mobile device has now outpaced yard signs in open houses. The value of having a good website is very important to everyone related in real estate. So for listing data, photos, detailed information about property for sale, interactive maps, neighborhood information, just information on how to actually purchase a home, especially for those potential first-time home buyers out there, very important. I can't stress enough making websites mobile ready. So being able for a home buyer to search what the process is for purchasing a home, what the next step is, and having that be mobile ready is very, very important. Personal connections are really what the real estate business is built on, so keeping those personal connections with a realtor, keeping those personal connections with potential clients, also very important. When the buyer is actually working with the realtor, calling personally to inform them of activity, sending postings as soon as things change, sending emails about their specific needs, very important to those buyers. Most of the buyers out there are very satisfied with their purchasing process and their selling process, and they're typically satisfied with their agent as well. And the satisfaction has increased over time, and I think this is really that personal connection about purchasing a home and this large piece of property that you won't necessarily get this one-on-one interaction with when you purchase anything else in life. One of the things that's really interesting is that we ask our recent buyers, okay, have you actually recommended your agent to anyone else? And 28% have recommended 3 or more times since buying, but most have recommended once since buying. Now, again, the survey goes out right after people purchase a home, so I think that's very interesting and is very telling about their experience. That's the data that I have for you today, but I will give a plug to our social sites here. If you liked any of that information or didn't like that information, a great way to follow along in what we're doing at NAR Research is to follow our Facebook and Twitter feeds. You can passively check out the information. We try and post a number of links every day, about 5 or so on Twitter and Facebook, and cross-post them to whichever your favorite social media platform is. This is just one topical area that we cover in this department. We have many people who are working here on mortgages, on QM, on changes that are happening with FHA, so it's all very interesting stuff, and we do try and keep current information posted there. If there are any questions, I am happy to take them as well.
All right, thanks, Jessica. That was some great info on the housing market trends from last year. As a reminder, any questions from the audience, please use the chat box function. One question that came in real quick, Jessica, when you were talking about the types of homes that people are looking for, someone was wondering, what's the definition of a forever home?
I'm sorry, the definition of what?
A forever home.
Oh, so one that they don't plan on moving from. So one quarter saying that they're never going to move again, that this is their home, that they may age in place, that this is their home, that they're never intentioning on moving. One of the things that is happening in the market right now is we're seeing this huge surge of baby boomers who are retiring. So the one quarter might not be too off from the share who are planning on never moving again. There is definitely a trend going on of baby boomers retiring and planning on aging in place. And I think that's probably everyone's ideal situation at the end of the day. Now, whether that's realistic or not, I'm not sure.
Okay. I don't know if this data was included in any of this research, but maybe you might know some other research that NAR has done. But any stats from NAR on boomerang buyers? Are they starting to enter the market, from foreclosure?
Yes.
Yeah.
Great question. So we do have research on that, and that is from this report too, and we are seeing them re-enter the market. So the share that we have is just under 10% of recent buyers were a boomerang buyer. So they had sold a distressed property in the past and they're reentering the market. And the typical year that they had sold that property was, I believe, around 2009, 2008. So we are seeing that they are coming back with the government programs that are out there pretty quickly.
So 10%,
It's below 10%. I believe the exact number is 8%, but don't quote me because I'm not sure the exact number off the top of my head.
Okay. Do you know what that would be historically? I mean, how many boomerang buyers consistently, make up the market in a year? I mean, a small percent?
That is a fantastic question. Unfortunately, we've only started collecting this data in the last 2 years, so we don't have a historical data set on it. And we're actually doing quite a bit of searching in the department to try and find anyone who has data on this group, including what's the share who actually do want to come back into the market. And I think it is a sizable share given the numbers that we've already seen come back. So definitely a good research topical area.
Do you guys have any data on short sales and percentage of transactions that are short sales, and if you guys are seeing those trend up with?
I don't collect data on that, unfortunately, so I wouldn't have numbers off the top of my head, but I do believe that we have done analysis on that as well. We are seeing the shares of distressed sales and potential underwater sales that could be distressed sales in the future decreasing substantially as home prices have increased.
Okay. Here's an interesting question. This might be maybe just data from Alta's side and not NAR's side. And from Alta, it's been a few years since they released the study, but Alta found that there were title issues on, I believe, a third of all transactions. But do you guys collect anything that maybe tracks any title issues on recent home purchases? And
ooh, that's a good question. Unfortunately, we don't have data on that.
Okay. All right. Well, Pamela, if you want to follow up with me after the call, I can connect you with some data that Alta provided a few years back. Jennifer, a question I had, and I was curious, if you guys know the makeup of the types of brokerages. Is there a trend for more, larger national brokerages, or is there still a good stronghold of, the smaller regional companies that are selling these properties?
Sure, that's a good question. So we do have a profile of real estate firms, and what we actually see is this really interesting dynamic. Most of the firms that are out there, 80%, are pretty small mom-and-pop firms. So they are those local firms that is built on those local relationships of referrals and really having those connections. So those local firms who make up 80% of the market, they actually only have 1 to 2 agents or brokers within their firm. So that is the bulk of the firms out there. Now the bulk of the agents actually work at the larger firms. So that is an interesting dichotomy that's out there. Okay.
Here's an interesting question from Mark. He wants to know if you guys track hip pocket sales, such as sales that occur prior to the property hitting an MLS.
Oh, yeah, that is a hot topic for sure. It is a hot topic. We don't have any tracking on that because, of course, they're pocket sales, so they're hitting the MLS beforehand. There's definitely been estimates that are out there. One of the hard things is trying to understand the rules in different states and local areas. They're definitely more popular on the West Coast than they are on the East Coast. And there's definitely been rules out there that are trying to be created to prevent any potential legal harm that could be happening as well. So hot topic, good issue to talk about. Data, don't have it.
Interesting. I'd never heard of the term hip pocket. So.
Yeah.
Any stats on seller financing? Lisa, if you can maybe provide any more color on your question, but Jessica, I don't know if you guys track any percentages there.
So it's definitely pretty rare from the data that I'm collecting, at least. We're not seeing much seller financing. Most of the loans that people are telling us that they actually have are traditional conventional loans. Now, among our first-time buyers, more common to use FHA, more common to use VA, but we're not seeing the seller financing. Now, I will say one caveat about that is that we know that the data that we have is a little bit off from the government data because home buyers don't necessarily know the type of loan that they have, and they don't necessarily know all of the details of it, even though they've probably been told a lot over the process. It's sometimes hard to track that.
Okay. All right, good questions so far. Again, as a reminder, if you have any questions, please use the chat box function, and we'll ask Jessica what she has for us. And also, just as a reminder, today's webinar is being recorded and should be available next week on Alta's website at alta.org/title topics. Meg had an interesting question, and Meg, this might be out of the discussion here, but Jessica, has NAR taken any steps to educate realtors and buyers on the regulatory changes coming August 1st with the new closing disclosures? Again, sorry, go ahead.
We're trying. We do post a lot of blog posts on all of the changes that are happening, especially recently with the down payment options that are changes that have happened as well. So we're trying to push that information out there. That's why I definitely encourage our Facebook and Twitter pages to follow along, because anything we put on the blog is cross-posted there. And we're trying to get that in the hands of people and trying to push those messages out. Absolutely.
Mm-hmm. Interesting point that Lautz makes. It just says on the page 5 of the closing disclosure, the realtor's ID number must be disclosed. Have you heard any discussions from NAR about that?
No.
And I think we'll just cut off kind of the closing disclosure questions. Great questions, everyone, but we're talking a little bit more of the data, and hopefully maybe.
No, you got me there.
No problem. You have any data maybe on the top 10 states for loan originations, purchase, and refinance? That might be more of a MBA question.
I don't know.
Yeah.
There might be data that we have on our blog, but I'm not familiar with it if we do have it, unfortunately.
Yeah, Mike, I think if you could probably find that data on NBA, pretty sure. How about any thoughts from NAR on predictions for home sales for 2015? Is it going to be a little better than last year?
Sure. We are expecting that the housing market will improve. The expectation and the outlook for the market is an increase in existing home sales, but a larger increase in new home sales as well. We are expecting that the interest rates by the end of the year should go up as well. There's been a lot of expectation that first-time home buyers will start coming back or entering the market. I'm torn on that. I do think there may be an increase in first-time home buyers, but the typical age that we see a first-time home buyer actually purchasing a home is 30 to 31 in a very short window between 1981 and today. We actually see that age of that first-time home buyer has not moved very much, and the typical age of our Gen Y cohort is actually 24. So I think they're a few years off by seeing this wave of first-time home buyers coming in as Gen Yers. Mm-hmm. So that's my own thought on the process. But there is, I think, in the coming years, we will see an increase in this first-time home buyers re-entering the market, especially with lower down payment requirements.
Yeah, it's been interesting. I've seen reports that say millennials don't want to buy any homes.
Yeah.
To the other,
hard time believing that.
Yeah, to the other extent that they're going to become, pretty much the lifeblood of the market. So it will be.
I mean, they absolutely are the economic future of the country. So I think that what happens with them will be very interesting to see. I do think the data that's out there, most of it says, at least, except for a few people, who say that they're never going to buy. Most of the research out there is consistent, saying that they do want to be homeowners.
Mm-hmm.
It's just the ability to actually purchase could be
Mm-hmm.
holding them back right now, which
Mm-hmm.
makes sense. They're 24. 24-year-olds don't normally buy homes.
Right. Do you guys see any significant shift from renters to buyers in 2015?
There's definitely that desire for those renters out there to purchase. So I do think as long as we can get the information out there and keep pushing it out there to potential consumers that you don't need 20% down, that you can buy a home with 3% down, that there are programs out there, I think a lot of it is knowledge and getting that information into people's hands.
Mm-hmm. How about any color on the ethnic demographics on the buyers? Do you guys have any data on that?
We do. We do have data on it. Our first-time home buyers are becoming a little more diverse. We're not seeing a huge change in the ethnicity of our home buyers, unfortunately. Now, there is a huge change that's happening in our country among the ethnicity of all of our citizens, so we should start seeing a shift to more diverse home buyers.
Definitely. Good questions, everyone. The well's running a little dry. I don't know if you guys have any other questions out there you want to ask Jessica. Otherwise, we'll think about wrapping up today's call.
All right. Thank you so much for having me on.
Hey, no problem. Just looking ahead to February for our next webinar, we will be talking about the CFPB's integrated mortgage disclosures, which, as you all probably know, go into effect August 1st. So this webinar will focus on what title professionals should be doing now to get their operation ready to complete the CD, the closing disclosure. Some of the items we'll be covering include how the closing disclosure ties to the loan estimate, alphabetizing of fees and nomenclature, the timing and any potential redisclosure, and the simultaneous title insurance fee disclosure issue, as well as lender closing instructions and liability. So be on the lookout for that registration, for information on how to register for that webinar. It will probably be, unfortunately, held toward the end of the month. I know that's kind of difficult for schedules, but I'm just trying to get all the speakers scheduled and availability. There's no more questions, Jessica, so thanks again for spending a little time with us, sharing some of NAR's research. Again, if you need to reach out to Jessica, her contact information is there on the screen. Also, you can feel free to reach out to me. So with that, that will bring us to the conclusion of today's presentation. Jessica, thanks again for joining us. I hope all the listeners found the presentation useful. Take care, everyone.